Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on the gold market. So on the daily chart you could see that market has completed first logical target. We have talked about this yesterday, that's first will be 1983, the COP on this ABCD pattern. And well, actually this is some kind of the agreement because this is 50% level. 50% is not a typical level for the gold, but you can see actually it already has been tested right here. And although we suggest that here should be some pullback, it's natural result of the support area, but we do not expect that it might be some really strong action to the upside. So probably retracement should be moderate. Overall background stands so that we expect that gold market remains under pressure, and chances on reaching this support area right now seems significant in the perspective of the few weeks. So this week we think that investors will not take any active steps, so they just accumulate the numbers that we've got, and we will get some PPI numbers, some manufacturing data, retail sales, CPI, sleep with this through the weekend, and on the next week it might return to the activity. We think that these numbers are not occasional. This is not the result of the some kind of the vulnerability of the January data, as analysis of the big banks tells us. As don't pay attention, this is occasion, it's just because of the January numbers usually very volatile, and that's why it's probably just single numbers. We think that this is not so, and this will have significant consequences for the market. In 2 words, so in the weekly report we will take a look at it in details, because it really has tight relation to the topics that we just have discussed in the weekend. On inflation and the budget deficit in the United States. It's really the new stage in this long-term soap opera. So now we're watching for the pullback here. On the daily chart, probably this target is too extended for this week. That's why we could consider something on the intraday chart. So on the full time frame chart, we're still dealing with this butterfly. First target has been reached. As we said, minor pullback should happen. And we suggested that it might be at least that market could retest the previous lows right there. It's around 2000 even. Maybe it will be slightly greater. Usually after such kind of the performance that we have here, a market has a good chance to proceed lower to the next destination point, which is 1962. But taking into consideration some bid-ask spread and other things, it would be better to consider it like the 1965 for possible position taking. So it stands right there. That's probably the target that we need to focus on. On the lower time frame, now the pullback's taking some shape, so you can see it could be considered like some kind of the hand shoulders or something. I was using this minor ABCD shows that the first target will be the OP around 1000 even, which greatly corresponds to the lows that I just have mentioned right there. The next target to the upside will be the XOP 2080, so it stands inside of the confluence. Next agreement will be a very strong area, so this probably might be used also for the entry, and this confluence might be used for placing the stop order above it if you consider taking the short position. How to take the position? It's actually we have the same options. We just talked about this in our euro video. You could either wait when the levels will be reached and drop your time frame to the 5-minute chart, start watching for the bearish patterns. For example, engulfings, hand and shoulders is different butterflies or something. Or you could split your position to step in a few times. For instance, first entry here. If market goes up, you take the next position here. Or you could do nothing, wait when retracement will reach some logical destination point, wherever it will be, and when the market will start dropping, you could try to jump in on minor pullback. So this is 3 options that we have on entry. Since retracement is just started, no targets have been achieved yet. Here is probably we need to wait and see what will happen around these levels. But in general, we think that recent CPI numbers is well significantly more than analysts of the big banks trying to assure us. So that's why be careful with this.